So I'll be taking through the fact sheet that we have, the latest one being for March 2025, and you can see what is contained there.
It is so important that you take time to read fact sheets. Whether you have a money market fund, a fixed income fund, a special fund, wherever you have invested your money, whether it's a global fund, a mutual fund from India or China or wherever it is, because the document gives you details about who is investing your money, what are the objectives, what is the risk that is being taken, what is the performance they have done since they've been in existence, and it's so important for you to understand it. So our effort, as Ian has said today, and in the future, is to just continue to help you understand so that when you pick it up, you know exactly when we say absolute return, when we talk about derivatives, when we talk about asset allocation, what exactly we mean. So we'll get started. And the first section we're going to go into is, perhaps maybe before I go into the actual performance, is talk about the fund itself. Oak Special Fund is a fund that we began that pools money, gets money from different investors, retail investors, institutional investors, SACCOs, corporates, everybody is welcome. And we pool all this money and we invest it. The reason it's called a special fund is because it's a category within the collective investment schemes regulation in Kenya that are called special funds because they invest in different financial assets locally and abroad. So all multi-asset funds in this country are called special funds, and that's why it's called Oak Special Fund. So Ian, in terms of returns, let's start there. A lot of people are like, you've written you target 20. Is it guaranteed? Do you guarantee 20%? So maybe let's begin there because we need to bust that myth. Yes. Because do we guarantee 20%?
We definitely do not guarantee 20% because if we could guarantee 20%, I believe the flood will be more. That is one. Two, majority of people will just liquidate their fixed assets and bring here for a guaranteed 20%. That's what would happen unless we are in a very high inflationary period whereby rates are at, let's say, 30% like we had, I think, some years, like 12 years, 13 years ago. So we do not guarantee the return. However, this is our targeted return. So we are working day and night to try and reach that. If we get above that, like last year, we'll be very happy. If we get maybe approaching, it's still okay, depending on the prevailing market conditions. As you have seen right now, we saw interest rates really drop. They started dropping from around October last year. And you can look at maybe the central bank website or even the newspapers, where treasury bonds have come down to levels from 16 to around 10.